Hello and welcome to IPO Central on ET Now. My guest today is from Deepa Jewellers. Their IPO is opening on September 1st and closes on 3rd. Price between 168 to 177 rupees per share. It's a fresh issue of 250 crores and OFS of 209.7 crores. So the total size is roughly around 460 odd crores for the IPO. Joining me now is Mr. Ashish Agarwal, who is the CMD of the company, and Dev Agarwal, who is the whole-time director of the company. Gentlemen, let me start off with asking you. Give us, you are a B2B player in the jewelry market. What is the kind of business dynamics that you have, and also the revenue model that you have?
We are an organized B2B designer, processor, and supplier of hallmark gold jewelry, predominantly having operations in South India, supplying to the retail chain stores and the standalone stores. Our revenue model consists of sales of processing of gold ornaments, sales of job work services, and sales of trading activities. We manufacture 22 karat gold ornaments, which includes Vadyanam, which is the gold waist belt, and CNC machine cut bangles.
It's a kind of so you basically B2B, so you supply to basically retail chains in southern market, basically, right? So what is the kind of the revenue or the revenue that you get from them? Is it on a making charges, or is it how does that work actually?
We have a total client base of 373 customers, which comprises of 47 corporate chain stores, and the remaining being the standalone stores. We sell these ornaments on an invoice basis, wherein we generate a revenue which includes the intrinsic value of gold plus the making charges and the stone charges attached to it.
Mr. Ashish, you're raising 250 crores in fresh issue. What is it you're going to use for?
Working capital requirement.
What is the kind of working capital requirement that you have for typically for this kind of business?
Our net operating cycle is about 54 days, which includes inventory days of 18 days and a trade receivable cycle of 36 days. So the funds that will flow into the business will be deployed in upscaling the inventory and the trade receivable block to upscale the overall scale of operations of the entity.
One thing which is coming out very clearly is that you're gradually increasing your margins, which is now around 7.6% in FY26. How much is the margin upside that you have in your business, and can you give us the reasons how margins have gone up for the last 3 years?
The margins have been on an upward trend in the last few years because of primary shift in SKU mix, as we are mostly focusing on more of studded jewelry, which offers a better conversion margin than the plain gold jewelry. And the second reason being my operational leverage, because my making charge expense as a percentage of my selling price has gone down because of the rise in prices. And the third being my expansion into the penetration into the southern markets, where I'm able to extract a better conversion margin because of my new sales offices that have started in the city of Vijayawada. So with these three reasons, my margins have been on an upward trend in the last few years.
Ashish, how do you look at this entire business? Is it seasonal in nature? Because certain markets have festive seasons starting off now.
It's not seasonal, it's 365 days a year.
And there's no seasonality of revenues that come in as before the festive season. You see much more.
Some seasonal attachment is there, but gold jewelry is purchased throughout India, throughout the year in India.
Can you give us a sense of how what is the kind of relationship that you have with your B2B partners, basically the retail chains? Is it a long-term agreement that is there, or is it is it on a job work basis?
We have been able to establish long-term relationships with our clients, because 18 of such entities have been associated with us since our inception, and about 122 clients are associated with us since more than 5 years. So this talks about the customer stickiness and our ability to meet the consistent delivery timelines and consistent quality. There is no written long-term agreement, but based on the historical purchase record, we have been consistently selling to our B2B clients since more than 2 decades.
Ashish, can you give us a sense of how do you manage the gold volatility? Because we've seen gold prices going up and down. And because you are into a B2B business, how do you manage the volatility?
We follow proper hedging policy. Details Dev will explain to you.
Yeah, we have proper hedging policy in place, which comprises of 3 mechanisms, which includes gold metal loan, GML facility, through which we procure a physical gold from bank on an unfixed basis at a nominal interest rate, for which we get a period of 180 days to fix the price. The second mechanism is entry into the forward contracts on MCX, wherein whenever we purchase physical gold from the market, we enter into a short contract on MCX futures. And the third mechanism is a back-to-back price fixing policy, wherein whenever a customer fixes the gold price while placing orders, we purchase the same quantity of gold at the same price with our bullion supplier. So with these 3 mechanisms in place, we are able to hedge about 85% of our total gold holdings, and hence this helps us absorb any kind of gain or loss that happens because of other gold price fluctuations in the market.
How do you manage inventory? Have you reduced the inventory days for you? And how are you managing inventory as well?
Our inventory days are have been more or less in the same range, ranging from 16 days to 24 days in the last 8 years. So we have been able to consistently turn our inventory around 20 times in a year. So with our focus on a limited number of SKUs and diverse client base, we have been able to churn our inventory well, and we have proper inventory management systems in place, which helps us manage our inventory efficiency.
Uh, who are the big suppliers for you for gold? Are these B2B partners your suppliers, or you buy it from the market?
We procure gold from banks, from local bullion suppliers, and we also import gold from UAE through IIBX, and we also have a certain gold which we exchange from the customers. So our big suppliers includes our banker, which is Yes Bank Trade Caritas, and also players like Arihant Bullion, DP Gold, and so on.
I've seen your margins go up, and you said that the reason for that is that you moved away from or moved into basically studded jewellery from plain gold jewellery. What is the kind of mix now you have with respect to studded and plain jewellery, gold jewellery?
Yeah, about 72% of my sales are studded jewelry, and about 28% is my plain gold jewelry.
And how has this mix moved over the last 3-4 years?
It has been on an upward trend. My studded jewelry component has consistently increased in the last 4 years, and is expected to continue to grow in the coming years ahead.
And how are you seeing the demand? Because what we are seeing is that a lot of uh, retailers are using exchange gold to replace jewelry. We are also seeing that because gold prices are going up, earlier customers or jewelers who were selling 22, now they were selling 18 or 16 carat with studded jewelries. Are you seeing that as well coming in?
Yes, there is a change in the market wherein because of the rise in the prices, the customers are opting for lightweight jewelry and also low caratage jewelry. And we as B2B suppliers and processors, we have been able to consistently adapt to the changing market conditions, and hence design our jewelry in terms of more lightweightness, and also we have started with lower caratage jewelry also in the market.
So does it improve your margins in that sense when you go to low carated studded jewelry?
The margins in terms of caratage is more or less the same. Only the base metal is changed. So we are indifferent in terms of the margins that we extract from the customers.
And so when you say that there's a relationship of your margins to the amount of studded jewelry that you're going to make, how does it increase?
Because the percentage of stones used in my particular products increases, and hence my margins thereby increase when I sell more of studded jewelry aspects.
Give us a sense of the expansion strategy that you have. You said you started off with Vijayawada as a new base which is there. how do you see that market growing for you? Where is the next growth coming in for you?
Yeah, our growth strategies are pillared upon these few factors, which include the setting up of my new manufacturing facility. So we have set up a new manufacturing facility in Hyderabad, which will help us expand our margins and also exercise better control over our supply chain management. And another important growth is pertaining to my expansion of my geographical footprint. On these lines, we have opened a sales office in Vijayawada, and on the similar lines, we'll be opening another office in Bangalore, which will help us reach out to the tier 2 and tier 3 towns and cities adjacent to these places. And another growth strategy which will be very important to us will be our expansion of our SKUs and expansion of our product portfolio, which will help us to cross sell these particular new SKUs to our existing clients, because of the fact that we have already established a long term relationships with the clients. So expansion of SKUs and try to cross sell these will be beneficial for the growth of the company.
I was looking at your cash flow from operations. It's been negative in last 2 years, especially net cash generated from operating activity. When do you expect that to turn positive? Is this money which you are raising help you in some way?
The cash flow from operating activities has been negative, primarily because of an increase in the inventory when my trade receivable block, and with the kind of pace that my company is expanding, it is expected to turn positive in the coming years very soon.
You've been growing a top line at 30 odd percent, which is there. Is that the same growth rate that you're going to look at?
Yes, we expect a slightly higher growth than what we have seen in the last few years, because of the fresh fund infusion in the company with the IPO funds coming in. So that's going to be the story. A slightly higher growth pattern that we have seen in the last few years.
Ashish and Dev, thank you very much for joining us on IPO Central. Your IPO is opening on September 1st. Price between 168 to 177. It's a fresh issue of 250 crores and OFS of 209.7 crores. Thank you for joining us today.
Thank you very
you.
much. It was a pleasure.